Welcome to Profile Traders, and this is the market analysis for November the 7th, Friday. And this is Reza Dilmagani speaking. I tweeted on Thursday night a daily chart of the S&P, which I analyzed very briefly by putting a contact, or I should say by selecting two contact points at the very top, drawing a trend line across it and coming up with a resistance projected price right around 2034, 2035. And as we can also see, this last leg has about 220 plus parabolic rally on the upside. Now, is this part of a good economy? Is this part of Republicans taking control over the zoo? Is this whatever it is? It's heftily and heavily being discounted into the market. And the concerning things below is that there is absolutely zero volume backing what we are seeing here on the upside. Even though that nowadays, as I have explained many times, volume is becoming irrelevant, because if you were short and this thing went up against you 200 points, you can sit down up there, cry as much as you want that there was no volume going up, you're still not gonna get your money back. So we can keep an eye on the volume matter, but the fact is that we have already 220 points plus rally in our hand, and I am expecting any push to the upside from these levels of 2025 will meet significant serious resistance. I see the upside to be extraordinarily limited moving from here, and I am extremely favoring the odds of a pullback rather than continuation of a rally. So now let's look a little bit more into the details. In here, after the euphoric move that we saw on Thursday, overnight didn't confirm the move since we weren't able to push up directionally. Therefore, we went rotational, and then we ended up closing at the very low of the overnight range, which is very negative. Then as we opened, we got a push to the downside with a range extension at C period, which failed. And as a result of that range extension failure, we started a rotation back up. So now we are in a trading range going from 2033 to 20, let's say 20. In order to break down and go towards 2008, we need to clear 2020 on the downside. And when we do break it, we do not want hesitation, but we do want rather momentum gaining and price coming down fast and directionally. On the upside, if we do break above 2033, I do not expect at all follow through far past 2033. It's very overbought, and the market is expecting nirvana the way it has priced things in, and I don't believe, and I think far from it, we are in a situation of nirvana with all that is going on in the US and abroad. So keep a very close eyes for a breakdown below 2020 and a fake break above 2033. If there is a fake break above 2033, I personally believe it will be a great sell opportunity up there. As for crude, same old stuff, you know, fast moves back and forth, no direction, no rhythm nor reason. You get couple of outside events here and there. You hear ISI blowing a little pipeline here and there in Saudi Arabia, really nothing major. The equation of an excess of oil in the market is still dominating. The dollar rally is also a factor. Slowing demand from all big economies ranging from China, Japan, Brazil, Russia. Everybody is slowing down, but on the other hand, everybody is pumping like there is no tomorrow and desperate to sell their oils on the free market. So the conditions remained exactly the same. You need to be very fast on your feet. You need to capture short-lived moves, make 30, 40 ticks here and there, and that's about it. You hang into anything too long, counter swing reversals will wipe you out. Therefore, I will give you the exact same parameters that I gave you the last time. I said 79.30 to 75.50 is the top part of the consolidation trading range. If it gets up there, it's a sell. Well, 79.30, 79.50 came up to be the very top on Friday, and we managed to close at the very bottom of the range. Therefore, that area up there is now becoming significant resistance. Again, if price comes for a retest of that area and we start to see hesitation, that area should reject price back to the downside. If we come down now and break below today's low of 78.20, there is a POC down there as a target, 77.80, and then past that we will be dealing with 77.50 and then 76.50. So the big trading range goes from 76.50 to 79.50, 3 points. When you have a big trading range like that, your best trade locations are always to buy as close as possible to the bottom range of the rotation and sell as close as possible to the higher end of the trading range and avoid the middle. Therefore, that sell above at 79.3 to 79.5, which by the way we did take that sell in our trading room, was an excellent location. So now let's go see what's going to happen with 78.20 on Sunday, because if that breaks, most likely 77.5 is next target down there. And for an upside break above 79.5, you can target 80, where you have a resting POC that needs to be taken care of. Now as for gold, I am ready if you wish to give me a medal for this superb, fabulous prediction that I gave you in the last recap. And it's on tape, you can go watch it. The good thing about me is that there is no lies, no BS, no pre-recorded garbage that I feed you. All work ahead of time, predictions and projections. I told you that there was likelihood that we were going to come down and break below 1136.8, and I also very specifically and very clearly stated that once we are going to break below 1136.8, I'm expecting the break to be failed, and I was expecting a very swift reversal back up, because at 1136 gold is almost giving it away. And I also warned you that a very sharp, stiff rally was expected after this fake break was going to take place. Well, look, we did break 36, we did turn around immediately, close at the very high of the overnight range, and the next day, explosion to the upside. So if you wish to give me a medal, I am ready to accept it. Thank you, with honors. It is now looking extremely good. Huge range up, huge volume up. The asset is extraordinary oversold. As I explained the last time, I'm not going to go into the details. Therefore, now we are on in the beginning of a directional move up. Any pullbacks towards significant supports are all buy. 1170 will be your support number 1. 1162 will be your support number 2. And as of right now, I do not wish to see 1162 break to the downside at all. Therefore, I am drawing the line in the sand for this pullback from this very directional and very impulsive move to the upside to be 1162. That's the maximum that I would allow this pullback to take place. So, can it come down from here because we have such a phenomenal 50 or 43 points or whatever points on the upside, 48 points to the upside? Yes. But I believe this is the beginning of serious money flowing into gold. 1170 overnight, Sunday night may become an attractive buy. Anywhere between the range of 62 to 70, it is going to encounter significant support. Ultimately, we are going towards 1300 gold. I mean, let's not kid ourselves. When gold becomes almost at the price of that garbage price line, let's not kid each other, okay? So I am extreme bullish on gold, and I believe that this push to the upside was significant both in price and volume, and I see definitely more upside room in gold. Therefore, buying the pullbacks is the name of the game. Now this euro, well, nothing. I mean, yes, it bounced a little bit, but I mean, it's nothing. Just a dead cat bounce. From a fundamental point of view, nothing at all has changed. Draghi still keep on devaluating. There is weakness in it. Now can it be that it has reached such a level of oversold that we are going to see a dead cat bounce and a little bit of a retreat in the US dollar? Absolutely. Therefore now 1.2350 is the main benchmark against which we should definitely continue to hold. As long as we do hold 1.2350, there is enough room on the upside to go reach 1.2560. So if we get now pullbacks towards 1.2415, it will become your support 1, and after that support 2, 1.2350. We do break 1.2350, then we have to reassess the situation and see what kind of a pain it will bring. But since it's so depleted, it could do very well like what gold did. Break briefly below 2350, fail, and then return, trap a whole bunch of late sellers in the market, then roar and push to the upside. So it is looking possible now for a dead cat bounce if we hold Sunday night above 1.2416. I would not be surprised by Monday that we will go towards deleting all these single A's here and then hitting the naked POC up there at 1.2562. Thank you for listening. This is Reza with ProfileTraders.com. If you wish to learn market profile trading, check us out. I'm sure we will teach you a great deal to read the markets and trade the markets using market profile. Have a wonderful weekend.